Okay, but you see my screen, right?
Yeah, we good.
Okay, now I got it back on replay. Okay, so I put it back on replay. All right, so we we was we just go back to what we was looking at, right? Price was over here. Remember I said we was bullish, we was coming up, right? So we came up, we took out this buy side over here, right?
Mm-hmm.
So we took out that buy side over there, and then we just pulled back into this order block right here, and then we
Mm-hmm.
took off, creating this order block right here, right?
All right.
So, right, so let's mark this out. So we made this order block, I ain't drawing it perfect, and then this traded back into that and took off. So now you got another order block right here, right? Which is a propulsion block. And you can, I like to look at the bodies because the bodies tell the story. But you see the wick came all the way down to the wicks do the damage, body tell the story, right? So we're going to extend that out in time where we know it went to, right? So then we came up here and we consolidated a little bit, went up, and we took out buy side again,
See,
right?
okay,
So
hold on. You saying we consolidated, but we went up consolidated, but then we dropped down some from right there.
all of this right here is that's all. See, this you got to look at it in the form of like dealing ranges, right? So from here, that low up to that high right there, right? That's the range of coming off of this propulsion block right here,
Mm-hmm.
right? That's your dealing range right there.
Okay, you
So
talking about different ranges this morning?
yeah, so that's your because your dealing range is from the lowest low to the highest high of the
So
leg.
dealing range is price leg too, right?
Yeah, price leg dealing range. Yeah, it's all that's the same thing, right? That it's like it's sort of the same thing because the dealing range can have multiple price legs in it, but
Okay.
it just depends on the time, the horizon or the time span you looking at, right? So it's from the lowest low to the highest high, right? So when you get up here to the high, you start consolidating, but you're just consolidating in the premium. See where we at? Like this 50%, we just consolidating in the premium of this price leg. You see what I'm saying? So we consolidating in the premium of this price leg, and then if you come up here and you grade just the premium of where we was at, right? We came back to the discount of the premium and then we took off. You see what I'm saying? So this is so we got this big heavy move up. And this is what I was talking about earlier when I was talking about you want to look to see how likely are we to come back here, right? So let's go down to a 15-minute chart right here, right? I'm recording this. I'm gonna put it on the thing and send you a link so you can look back at it. Right. So this is the hourly dealing range, right?
Mm-hmm.
And so when you look at it, on the 15-minute, right, it made the 15-minute made a swing low right here. So now it's inside this range right there. And see when
Okay.
you see when I graded, you see when I graded the premium of the hourly, remember when it came back to the discount of that premium, it just came back to the discount of the 15-minute dealing range. That's why I was like, you look at the lower time frame.
Why didn't we was looking for it to go back to the pink down there, wasn't it? We
Eventually,
went.
you would look
Oh,
for it to go there
eventually.
eventually.
Dang.
You see what I'm
What it
saying?
make
That's
you
why.
know it?
See, and then when you look at right here, right and this is what I've been talking. This is what I'll talk about last night, and this is what I revisited this morning. This exact thing right here. We wanted to come here. Right, this is our hourly range. We looking for it to come here. The hourly ain't giving us nothing in. It's just a straight shot up. So now we want to know price is really bullish. How likely is it to come all the way back down here? That's when you go to the lower time frames to see what the lower time frames doing. The 15-minute, is showing you, okay, it made a short-term swing low right here. Right? So it made a short-term swing low right there. So now this is external liquidity to the 15-minute. Right? So now this right
Above
here,
that or below that is
below it,
external? Okay.
because it's a low. Right? This right here, now this right here is external, right? External sell side on the 15-minute. right? That's external sell side on the 15-minute. But in the 60-minute range, it's just internal liquidity for the whole 60. God dog it, come here. For the whole 60-minute move right here, that's just internal liquidity for the 60. But on the 15-minute time frame, right, if price is bullish, we should not break that low because price goes from external to internal. See over here on the 60-minute, right? On the 60-minute, right? We came here, we came to external, we pushed up, hit external liquidity right here, right? We hit external liquidity, came up, hit external liquidity here, came back to internal, right? Right there at that fair value gap. We came up, we hit external liquidity right there, that high right there, right here, right? Pulled back a little bit, right? Coming inside here is internal on some lower time frame, right? Created an order block.
Right now, right?
Yeah, this 60 minutes. Came down, pulled back a little bit, right? Created an order block, pushed up, taking out external liquidity again because we started pulling back. So once we go back above that high, we taking out external liquidity again there, right? So we pull back into the range to internal liquidity at this order block. That's internal liquidity. Then we went up and we took out external liquidity again, right? We took out external liquidity again at this high, right? So we coming up here. Now we just consolidating, right? And we trying to figure out how likely are we to go. I'm just making some little lines here so I can move it around, right? How likely are we to come all the way back down to this pink area right here, right? How likely are we to come? Yeah, the order block. How likely are we to come back to this order block, right? We're watching the hourly. So now that's when you go to the 15-minute, right?
See what they telling you.
To see what it's telling you. You go to the 15-minute and you see the 15-minute made a short-term low right there. Now let's look at the 15-minute. On doing the same thing.
But that short-term low just seems so insignificant.
But listen to me. Listen to me now. Right? 15-minute, the same thing. We took out external liquidity right here. Remember, we was on the hourly. External liquidity, pulled back to internal, right? Took out external liquidity, right? We consolidated a little bit. We made a short-term low right there. We didn't take out that low. We pushed up, right? Took out external liquidity again, pulled back to internal liquidity, hit the order block, bodies respecting the fair value gap, took off again, right? Now we got heavy displacement, came back, made another low, right? Because we came here, we did that a little bit, took off, made a short-term low. The hourly didn't make a short-term low.
So now that short-term low right there, that's not stopping you from going back down to the pink, or that's our new stop spot?
It's a 15-minute, so it's not stopping you from going. It's a lower time frame. It's not stopping you from going down there, but the pink on the hour. But it's giving you intentions of price. So now, once you get this short-term low, this is now external liquidity on the 15-minute. Price is bullish, so you don't want to see this broken, because if you go from external to external, that's a sign of a reversal. You don't want price to reverse yet. So the 15-minute is telling you, okay, as long as we respect this low, we probably not coming back down here where you want to go to, right? So we looking at what the 15-minute doing now. So we've taken out external, right? So we push down. Right, so we come back down to internal right there, right? And we push up, we poke above this high, right? Taking out external right there, but this is the low right here that we're watching. Why? Because from this low to this high, this low is internal liquidity now on the 15-minute. So it's okay if we take out this high and then come take out that low. This is the low we're watching. This is our dealing range, right? So we come to internal liquidity. We come back to the order block right here, internal liquidity, right? consolidate. We still where we at. We still respecting this low. We're coming all the way down to these order blocks, but the bodies of the candles are staying way up here above this order block over here. And then, you know what I'm saying? And then we take off again and take our external liquidity. So right here, when we can,
See now, look, see that's why I always get confused. Now, see that the big stuff that you're doing right now, all that is inside. See your arrow in the middle where your arrow come down, the end of your arrow, right there.
mm-hmm.
You okay? Stay at the end of your arrow, right there. Okay. Now, from that little arrow back to the beginning of your consolidation, right there, where go back, right, no, a little bit more to the right. To the right. Go up where your line on. You're right there. From that to the end of your arrow is the same thing as your big picture, the shape of it. You know what I mean?
Yeah.
So that's what be throwing me off. You saying you looking at that, saying okay, it made a low right here, low. But what about these other lows and highs and other PD arrays inside there?
Okay.
You saying it's trying to come back to this and that, but this and
Okay.
that is inside.
Yeah. I feel you. I feel you. I feel you. Now check it out. Now check it out. This right here. Let's do it like this so that we can get a good differentiation between everything. I forgot where we even started at. Oh, I remember what we was doing. Let me hide this stuff over here so that
we were doing something about the order block.
Yeah, we gon' yeah. Why you ask why we ain't go back to that high, but we'll get back to it. Yeah, we'll get to it in a second. We'll get Okay, so let me. It's fractal. That's what I'm saying. It's fractal. We gonna break it down right now. So
yeah, but see, that would be throwing me off.
I know.
Because you be talking about okay,
I know it be throwing me off too.
All this other stuff.
That's what that you know when I be talking about stay aware of the time frames. All right, so okay, so boom. This is what we gonna do. We gonna let's do it like this right here. Let's do it like this right here. So this is our hourly range right here. Let me move. Let's go to let's put the replay. Let's put the replay. Let's just come right because we was talking about this consolidation, right? So we gonna put the replay to right there, so we ain't got to worry about seeing nothing else. Don't need that. Okay, so this is our hourly price leg, right? So we gonna grade this. We gonna put this in the 4th grade, right? So now that we got this in the 4th grade, we gonna do it like this right here. We gonna break it down for you. Okay, so this ain't gonna be perfect, but from the low to the 25%, right? From the low to the 25%. Now we're gonna make this. That's gonna be red. That's gonna be green. And this right here is gonna be the discount of the discount, right?
Discount of the discount.
Yeah. This is the discount.
You below the 50% of the
discount.
Yeah. All right. You say you was at 25%. So the 100 is at that other red line up there behind your thing. The 100% or full. I see a red line behind where you typing.
Oh, that's just something that's the way I had taught. It was an external. I'll show you in a second. All right, this is the discount of the discount. See, when I wrote the line, that was like the external, right? And then from so from there, this is the premium of the. Let's put this in the middle. Center. All right, so that's the discount of the discount.
Man, the junk will bust your brain.
Yeah,
well,
but
it is here, man. You can't be jumping off in there.
Yeah, you got. I'm saying you got. That's what people don't understand. You can't just jump in the. You know what I'm saying? You got to study it and understand the concepts. And once you understand the concepts, then you can, you know what I'm saying, you can start to put together a educated plan of like, you know what I'm saying, when I want to take the trade, when I want. And this is the premium of the discount. Right? And we're going to make that red. Okay. Oh, I need to put this on hourly. That's hourly, right? That's hour. It's gonna make sense once I put all this together for you, right? So now,
And Mike.
so now, in up here, this is the discount of the premium. Ah,
So the sell side is the pink and green up top, and the buy side is the pink and green on the bottom, or reverse?
the pink and green is the discount in the premium.
Up top.
Both. So okay, so this is the full dealing range, right? Right here in the middle is equilibrium. Oh, I forgot to
Right.
let me do that.
But I'm talking about the top two, the green and red one up top. That's the sell side.
No, sell side is below lows. Anything below a low is sell side. Anything above a high is buy side. That's the liquidity. You talk about like the liquidity and the ranges is different things. So
Now,
anytime
when
you
you
hear
say hold on, when you say sell side, I'm thinking that I'm going to sell it
no,
and
that's
get some money
anything
for it.
that's sell side. Sell side is the money you trying to get that's sitting below a low. It's sell side liquidity. It's below a low. Buy side liquidity is above a swing high. So anytime you see a swing low, excuse me, there's sell side liquidity under there. Anytime you see a swing high, there's buy side liquidity above there.
Okay, now you saying sell side on the top part. I mean on the bottom part. But them lower numbers, when I want to be buying down at the lower numbers and selling at the higher number, I'm confused right there.
Somebody's that's what I'm saying. It's a stop loss. So somebody's okay. Let me write this and then I'll explain it to you. Equilibrium. Okay. Okay. We're gonna make this fat orange. All right. So don't need that right now. And so now this is our dealing range right here. Whenever you got a dealing range, you can break anything down in quads, right? So above equilibrium is the premium of your dealing range. Below equilibrium is the discount of your dealing range.
Okay, and what
Right?
do premium mean? Higher numbers, or what does premium mean?
Premium means it's expensive. It's getting expensive.
Okay,
Discount mean it's getting
it's
cheap.
cheap. Yeah.
Right? So at the low end of your range, prices in a discount. At the high end of the range, prices in a premium. That's why you always say, you hear me say you want to sell in a premium and buy in a discount. What does that mean? Right? What does that
But
mean?
I
You
heard
got
you saying sell side liquidity when you
that.
be on the
Listen to me.
opposite end.
Follow me for a minute. It's gonna
Okay.
make sense. It's gonna make sense. Right? So you got this, matter of fact, I'm gonna back this up some more right here so we can't see no candles. Except that. That's all we want to see is our dealing range, right?
Mm-hmm.
So now, you hear me when I say you wanna sell in a premium and buy in a discount. Now let's clear this up. Let's clear this up for you right here. Right? You got a swing low right here, right? You got a candle
Yes.
here with a higher low to the left and a higher low to the right. That's a swing
Right.
low.
That's a swing low.
Whenever you see a swing low, below a swing low are sell stops, meaning somebody is in a trade, right? Meaning somebody is in a trade and they either bought it, right? Okay. Right. So sell side liquidity means one, someone is in a trade and that's and their stop is here, right? And what kind of stop if they buy it, if somebody is in a long trade, is in a long trade, right? And if you buy something, if you go long, the way you get out of it is you sell it, right? You sell it to get out,
So
right?
that's going long. I thought that was going short to sell it.
Listen to me. Somebody is already in a long trade. They're in a trade. You see what I'm saying? They're in a trade going up, and their sales stop, right, is sitting here, right? Their sales stop. They're saying if price comes back down here, sell this position and get me out. So you got sales stops.
No more, basically.
So I don't lose no more. Okay.
Okay.
Right
Okay,
now,
when
or
we get right
two.
there.
Wait a minute. Or two. Right. Or two. Someone wants to go short because they think it's gonna break down. They want to go short because they think price will break down, right? So they have sales stops down here. Now, if you're not in a trade and you want to get in a trade that's going down and you're not in a trade already, you put
A buy stop, right?
no, a sales stop.
A sales stop. Okay.
You put a sales stop there, right?
I thought, hold on.
Right? You put a sales stop. You put a sales stop right there. If you already in a trade and you're going long and you want to get out, what kind of stop you need? A sales stop. You put the sales stop below the low because you don't want to lose no more money.
I'm already in the trade, and I'm letting
You got
know if you go down that far, cut it off. I don't want to lose
yep,
no more.
cut it off right there. And then you have people who not in a trade and they think when we come back down below this low because price went up, came here and went, and they think when price come below this low, it's gonna keep falling. So they set a sell stop right here because they want to go down. So you got sell stops sitting right here. So no, because you're not in the trade yet. You're not in a trade yet, and you want to get short right here. So they have sales stops sitting here. So when the market come down,
If I get it, let me see if I get it.
yeah.
All right, so now I ain't in the trade, but I'm gonna set my sales stop right there. So when you get there, it's gonna pick me up right there. And then
Let me show it to you. I can show it to you easy right here. You see this? You see this low right here?
Yeah.
Right. I think when price go below that low, it's gonna keep falling. If I right click right here, see it says sell limit 1, sell market 1. If I want to go, I put an order right here.
Order submitted.
Now I say sell. Sell limit. You see what I'm saying? And when it come down, it's gonna put me in a trade short. You see what I'm saying? And if I come above price and right click here, right? If I say buy, right, because I'm above a high, right? If I say buy stop limit, that's a buy stop. You see what I'm saying? Yeah. Buy stop. It'll keep me in and take me long. You see what I'm saying? And if I come down here and I go to sell stop, it'll get me in and take me short. But if I'm already in a trade, right? If I'm okay, hold on. Let me do this right here. Go to Slim, right? Go to sim, and then I'm just gonna buy the market, right? So now I'm in a trade and my sales stop, right? If price comes below this low, my sales stop is there, and now my target is there. You see what I'm saying? So I'm in a trade and my sales stop is down there. If it come down here, get me out of the trade. You see what I'm saying?
If you go to the green, we getting out too, right?
Yeah, if you go to the green, you getting out too. You see what I'm saying?
Money on the green and we stopping from losing on the red.
Stopping from losing on the red. But if I'm not in a trade, then see how it says sales stop? If I'm not in a trade, then I put a sales stop here because I want to what's the name?
Target filled.
right? I want to get in and go short. So your sales stops, are below lows. You see what I'm
Okay.
saying? You put your, so anytime you see a swing low, that's where your sales stops are. Sales stops are what? Liquidity. So that's why you say sell side liquidity is below the lows.
All right, so now check this out. When you set your sales stop right there because you're not in a trade, how long do you got before you got to make a decision? By the end of the day, or the end of your 15 minutes, or the end of your 5 minutes?
The order be good for a day unless you got it on good to cancel, but you typically set it for good for the day, and it'll stay there all day long until 4 o'clock.
On
Yeah,
a
four, like
any
4:15 on any time frame. It's just gonna sit there until the end of the day. At the close of the day, then it'll cancel automatically unless you got it set to good to cancel, right?
Mhm.
But the orders, like if you go into your thing, see right there, say TIF, right? You see it got day, good to cancel, good till date, right? But I keep mine on date, right? Because you put it on good to cancel, it will never cancel until like every platform have like, I think it'd be like 2 3 weeks or 2 3 months or how, like 90 days. I think it'd be 90 days, and then it'll cancel it on its own, and then you can say good to date, where you can set a date when you want it to, you know what I'm saying, like you can set the date when you want it to cancel, you know what I'm saying, or good to cancel, it just stayed for whatever the default is for that platform, and then good day is at the end of the day, it's just gonna close all open positions. Man, stay focused, man. We over here doing this
I'm focused. I'm
now.
focused.
Okay, so you got sell
I just
stops
got got
below
it right. I
lows,
ain't got it all. Go ahead, bro.
and then we got buy stops above highs. So that's why you hear me say sell side liquidity and buy side liquidity,
Oh,
right?
hold on.
Cause
I ain't. Nah, I got the same a question about the same thing we on now. Like when I was saying how much time we got to go down. Okay, now that time done went by, and how far? Okay, that's what I'm saying. If I got my stop right there, and it go down to whatever, whatever, and when it come back to my sales stop, is what is going to happen right there is going. I ain't gonna make no money though. That's gonna be dead even. I'm trying to figure out how that works. Like if
man,
I ain't in it,
if
if
you
I
let
ain't
me
in
go
it.
through it, if you let me go through what I'm doing, you'll figure it out. You trying to get ahead of you trying to put the horse in front of the you trying to put the cart in front of the horse. You got to,
Okay.
you're saying, listen to me now. Now, I was just trying to clear up the buy stops and sell stops. So you see this swing high right here? There's buy stops
Mm-hmm.
up there. See this swing low right here? There's sell stops right there. So that's why you say sell side liquidity, buy side liquidity. You know what I'm saying? Don't overthink it. And you just talk about the stops. That's just, if sell side, meaning you're going below a low. Buy side, meaning you're going above a high. That's all it is. Don't overthink it. It's just sell side liquid. Don't think about I'm buying, I'm selling, because when you go short, you're not buying into the position, you're selling into the position. When you're going long, you're buying into the position. You see what I'm saying? That's why you always say you want to sell in a premium,
Okay.
buy in a discount.
Okay.
You,
Okay.
you see what I'm
Okay.
saying? You're
Now
selling the
that hit
market.
me a little bit. That just hit me a little bit now. So we already in the trade. So I'm all the way up here in the green. So
You're
now
not
I
in the
got.
trade. You're
So
not,
I'm just
listen.
saying this part of if I was in the trade.
Yeah, if you are in
If I
trade.
was in the trade, now I'm going down, down, down. That red line, your sales start. I'm like, yeah, get me out of here.
Yes.
So that money getting too low. Okay, now
Yes.
and the buy stop. If it get to that line, that means the price getting too high. I don't want to spend that much for this.
Yes.
Okay, all right, let's rock and roll. Man, I got this
Yeah.
here, man. Let's go.
Yeah. So your buy stops is if you already in a short trade, and if it
Right,
get up there, get me out. The sell
right,
stops is if you in a long trade, get me out. Or
right.
you can have a buy stop here if you think once we break this high, price gonna keep running. So
Yeah.
you know what I'm saying? Buy it and get me in so I can go. If you think
Uh-huh.
below, sell it to get me in so I can go. So it's that's why I say you got
Okay.
two different kinds. You got people that's in a long,
Right.
and you got people that want to break out.
All
So
right, check
that's where
this
your
out.
liquidity come from.
when dang, what I was just gonna
No
say.
more questions. Listen.
All right, go
Okay.
ahead.
This the range on the hourly, right?
Mm-hmm.
So you got the premium of the anything above equilibrium is the premium, right? So
Right.
we got the premium. Anything below equilibrium is the discount, right?
Mm-hmm.
So now you always hear me say you want to sell in a premium, you want to buy in a discount, right? So if you on the hourly time frame, we have said that get out of here. We have said that get out of there. We said that price is bullish, right? Remember we talked about it. We said price was bullish because we came up, we had our breaking market structure, we pulled back, we got our order block, and we took off. So price is bullish, right? Meaning that we want to buy. Picasso is up here, right? So we looking for Picasso. Hey, where's Picasso? I know I put Picasso on the bottom of that thing down there. Right? Picasso is up here. We looking for Picasso. Okay.
The
So
draw. That's the draw.
the draw. Yes, that's why we call you remember we call him Picasso, called Picasso was an artist, and the draw is up here. So
Yeah.
if we want to, if we're bullish, we want to buy. Where do we want to buy? We want to buy in the discount, right?
Mm-hmm.
So for this price leg right here, we're trying to buy down here
Right.
because we want to buy in the discount. Now, how likely are we to pull all the way back to the discount if price is this bullish? We got heavy displacement. That's when we start going to the lower time frames, right? And looking at what the lower time frames did. So looking at it on the 15-minute, right? Now we see on the 15-minute.
Back to the five. What we do 5 minutes after this?
But I'm just saying, listen for a second, right? So now that we on the 15-minute, let me find my Fibonacci, right? So on the 15-minute, we see that the 15-minute got another dealing range in it up here. You see what I'm saying? On the 15-minute, we came up, we pulled back into this imbalance right here, and then we got another displacement leg up. Right? We got another displacement leg up. And right, remember, where does price tend to consolidate at equilibrium, right? So equilibrium for this price leg right here is right there, right? So that's equilibrium for that price leg right there. All right, so we're gonna take this, we're gonna make a line right here, we're gonna make it all this, right? We're gonna make this stuff smaller, right? So this is equilibrium on the 15-minute, right? This price leg that the 15-minute made, right? So now you got a new dealing range on the 15-minute that's in the premium part of the hourly. So how likely is price to come back down here? Okay, let's see. For this 15-minute, this right here was residing below that swing right there, right? That's a swing low. What's below there? Sell stops, right?
Oh,
and then
swing low, swing. Okay.
you see what I'm saying? And then over here, what's up here?
So
Buy stops. You see what I'm saying? Buy stops, cause that's the swing high, right? So now on the 15-minute, right? We started here, we came up, we pushed up above this swing high right here, right? So we came above that swing high right there. What was above that swing high? Buy stops. When we come above the high, we're taking out what? What are we taking out? We're taking out external buy stops, right? So we took out external buy stops right here.
Because it's out of what? Why is it external? Why you say
It's out because you're going above, like, ignore all this stuff to the right now, right? If we come back here, right? That's the swing high right there. That's the height of the move right there. So once price trades past that, now you just took out external liquidity. You see what I'm saying? Because you moved outside of the move, right? You're going outside of the range. So we've come up, we've taken out external liquidity, and now we start pulling back. We've made another swing high, and now inside this range right there, this is our equilibrium. And if you notice, price consolidated
I was just gonna say, but it's a
at
fair
it.
value gap in there
But
right
listen to me. Remember I be talking about the Timonucci's when I was like, you can kind of use that to predict how far price is gonna go, right? Whenever you see price going up and then it just start consolidating like that, you can take a fib, right? You can take a fib and you can run the fib from the low and then put the 50% at the consolidation, right? And that will let you know about how far that price can realistically run, right? You see what I'm saying?
And it said price tends to consolidate
And
at
yeah,
equilibrium.
price consolidates at equilibrium. So if you notice right there, price was consolidating, and then when we got here, we started pulling back. And then when you run the fib from the high to the low, you see, oh, it was consolidating there. That's equilibrium. Now I want to buy. I want to see price come back to the discount. The discount where?
Check this out. Now, would you go with that or do
Boy, if you don't stop interrupting me, listen, man. I'm telling you now. That's what I'm telling you. That's what I'm telling you now. Like, so check it, right? So now, this swing low right here to this swing high right here, that's new dealing range, right? You want to be a buyer and price is bullish, right? And you want to be a buyer, but you want to buy in the discount, right? So when price starts to pull back, right, on the 15-minute, you want to find a reason to be buying inside this area here, right? You want why? Because it's below equilibrium.
Yeah, you buying them.
Okay, now as far as the hourly, how likely is it to get back to the discount of the hourly? This point right here is telling you I really don't want to go back there. Why? Because you set an order block and you set a propulsion block on the 15-minute. So you don't want to come back down to the hourly discount. So that's why I said when you look at the higher time frame and it ain't giving you nothing concrete, then you start going down to see if you got now. In this case, the 15-minute is giving you clues, right? Then if you go to the 5-minute, the 5-minute is giving you clues that it don't want, like the 5-minute here, the 5-minute showing you I don't want to get down there. So now. So now if you come down here and you break this, right? If you break this and start closing below it, then you can say, okay, we are coming back here. But since price is exceedingly bullish, you don't want to see it come back there. And on top of that, it's inside the discount of the premium. You see what I'm saying? So you can break this part down into its own dealing range, right? Like on a 60-minute, it just looked like you're just looking at the premium of the, because it's above equilibrium. Nah, you ain't just looking at the premium, you're looking at a different dealing range on a lower time frame, but it's coming back to the discount of the premium because on this time frame you're coming back to the discount of the price move. You follow what I'm saying?
So now that you see where the see that's what I'm saying. Candles, consolidate. Now, do you think it's going to go back to equilibrium?
Now we consolidating here, right? So now when you consolidating, we call that engineering liquidity, right? So we engineering liquidity right here, right? And then just depend on what time of day all this is happening, right? So we engineering liquidity, right? And then we come down, right? And then we come down into the discount, right? So right here at 9:30, we go up, take out the buy side, right? And then we come down into the discount right there, right? So poking up that, taking that buy side, that's letting you know price is still bullish. You see what I'm
Yeah,
saying?
still
Because
want to go up.
we went up there, we poked up there, we took out that buy side, and then we moved back to the discount of this range right here, right? So now you're looking for a reason to buy inside here. Down here, you don't want to see price close below the propulsion block. You don't want to see price close below the order block. You don't want to see price close below this swing low, right? Because we've come up, right? And we've taken out external liquidity. So we don't want to move and take out external liquidity again. That's showing a reversal. You want to go external to internal, external to internal. You see what I'm saying? So now that we've taken out external liquidity, you don't want to come back and take out external. This is external to this price leg right here. You see what I'm saying? So if we do take this out, the 15-minute, it has shifted bearish, but the hourly, you can still come down into the discount of the hourly. But if price is really bullish, you don't want, in this case, you don't want it to come back down here. You see what I'm saying? And then now you're engineering liquidity. And so when, excuse me, now that we coming down, still engineering liquidity, we still respecting the order blocks, right? And we consolidating. I said we just consolidating, and then I need to speed it up, right? Come back down into the order block again, right? And then now, boop, run stops. You know what I'm saying? Taking people out, and then look at and then now that's good enough. That's good enough. We done got back to the buy side right there, right? So, but look at, right? So we got the 15-minute price leg. We put it in the 4th grade. We got it graded, right? Got everything graded. So we got the discount of the 15-minute. We got the premium of the 15-minute, right? And that's also the premium of the hourly premium and the discount of the hourly premium. Right? You're up here in this area here. So now,
50% of the hours.
yeah. And so when you came up here, right, we engineered liquidity up here in the top 25% of this range, right? Took out the buy side and then shot down to a discount, right? Came down to a discount, and then we consolidated right there at equilibrium, right? We did all this consolidating, right? Then right here during the London, we came down and took out sell side, Judy swing, came down, took out sell side, respect the order block, shot back up, took out buy side. That's a Judy swing. Fake that way to go that way. Now, then we come back over here to the 930. Guess what it does? Now it gives New York an opportunity to do the same thing. Take out sell side, go that way. You know what I'm saying? Another Judy swing. It's just repeating. The London did a Judy swing. Now the New York need to get its chance. Did the Judy swing, and it's still in the discount when you want to buy. It's just giving London an opportunity to buy and go up. Then it's come back, giving New York an opportunity to buy, and then it come up and hit Picasso. You see what I'm saying? And that's how you use the lower time frame, not to anticipate, are we gonna go back down there? You're using the clues when you be like, why are you not looking at that area? Why are you not looking at that area? Because you're using the clues and price to see if you're still on the right side. And so sometimes you're going to miss the move. Sometimes you're going to miss the move because when you're in a situation like this right here, you want to wait for confirmation. You see what I'm saying? And like, what's the confirmation of this move, right? So the hourly took off, right? And so the hourly, I want to know if it's going to come down here to this hourly. I drop down to the 15-minute. I see, okay, the 15-minute has a dealing range. So now I'm only focusing on this right here because I don't want to break below that low. So now I'm looking for clues during kill zones of when price gonna so now we got okay, we're gonna go from, we just gonna do the actual time. I ain't gonna do the full kill zone, right? I'm just gonna do the start of the London, right? And then this is the start of the New York. Okay, so started London right here, right? We still consolidating, and then we go up, we take our buy side, still showing bullishness, right? And then we drop down into New York, right? Into New York, we come all the way down to the discount, right? And so
Mm-hmm.
on this day, price don't do
We
nothing.
on 15 minutes, right?
Yeah, these 15 minutes. On this day,
Okay.
price ain't do nothing but chop, right? Because this right here is the close of New York. So all price did was chop right here. You know what I'm saying? It would have been a good opportunity to like maybe get short. Because you had opportunity to get short here, but we bullish, so we looking for reasons to buy. Right?
Yeah.
So price ain't do nothing but chop this day. Right? For somebody who holding it for a while, you know what I'm saying? You could have came back and got an entry like down here somewhere and put your stop below the low right there and just held it. If you can hold overnight, that's what you would do. You see what I'm saying? You come back, you buy, put your stop below the low. If it go below there, get me out, and then you put your target up there. But we not holding it. We just day trading during the time frame, right? I mean during our time frame. So now come over here to the next day, and we're gonna go over here to the London Open there. Then we're gonna go over here to the New York Open there, and then we're gonna go over here to the New York Close there, right? So now on this day right here, we still in the same dealing range, right? And then with the London, we come down and we take out the sell stops, right? And then go take out the buy stops, Judas swing right there. And then you get an opportunity again in the New York. You come down, take out the sell stops again, go back up, take out the buy stops, Judas swing, and go all the way up to Picasso. Now, over here on this day, when you come down here, take out these sell stops, right? Then you push back up there, come down. Then when you push back up there, boom, breaking market structure right there. That's your break. That's your breaking market structure right here. You got your breaking market structure there. When you tap the bud at discounted here, pull back into the fair value gap right there. Right there on that candle right there after the breaking market structure.
Boy, you
Boom.
find all that stuff up there.
That's your entry. That's your entry right there. Cause this is your confirmation here, right? We came down to the discount. We ran sell stops. We got a bullish breaking market structure. We retrace back to a fair value gap. That's your confirmation there.
What the green line is your entry or the box is your entry?
Down here, you're entering down here
Okay,
when
the
you
box
pull
is
back.
getting
Yeah,
in somewhere right there.
yeah. When
Okay.
you pull back, you pulling back right there. This one here, it look like it.
You say you're entering that swing
Yeah.
low.
It might not have picked you up because it just went tick for tick. You see what I'm saying? But that's your for fair value gaps right there. That would be entry. It might not have picked you up because it went tick for tick. You could have went in on this mitigation block right here. It would have picked you up on that mitigation block. You could have went in on this inversion fair value gap right here. That would have picked you up. This may or may not have picked you up, but that's your confirmation. That's what I say. That's why I tell you wait for your confirmation, right? You're looking at all this, but this is your confirmation. You take out sell stops, you push up, breaking market structure right there during the time when you're supposed to be trading. Then coming into the New York right here, right? You already got the confirmation over here, right? So you come down here, you see we run stops, right? We run stops there, right? And then we just start consolidating there. Right. Once we start this consolidating there, we get this displacement up. Right. That's your confirmation right there. Trade back down into your imbalance. This one here gonna pick you up on the order block, on the fair value gap, on the mitigation block.
Yeah.
Everything got picked
That
up.
was
There's your
getting in there.
Yeah, there
And
you go
then
during the New York, and then you off to the races.
and then all the way top is where I say get me out of there. I ain't greedy.
Yes.
I don't want no more. Okay.
Yes, and this could have been a target right here, but that's how, you know what I'm saying, that. And then now going back going back to the original question that you had when we was talking about, when you said why didn't it this kind of touch on it too. Everything we just said touch on it too. Now going back to the original question when you was like we wanted it to come back here, that's when it came back here. See what I'm saying? This right here, the algorithm was still bullish it was like really bullish on this run over here to get back to something over here. This is all time high, so you know what I'm saying, it ain't nothing to look at over there, right?
Yeah.
So the algorithm was like super bullish right there, and then now this is when it pulled back into the discount of that initial move there. You see what I'm saying? Because if you
Okay,
go,
close the thing up some. Let me see some more screen.
if
Like
you
make it, yeah. Now, why isn't it coming back to them other prices down there when you say, yeah, we are at an all time high? Yeah, why it ain't going down to them other prices? It ain't
because
never
this is,
going back down.
it could, it could, but
Oh,
remember
it just ain't
this.
getting us the signs right now that we
Yeah,
want to see.
this move right here took out all of this buy side, right?
Yeah.
And then we set this propulsion block right there. And this is the first time we came back to that propulsion block. So you expect that propulsion block to do its job.
Yeah, we done set a new trend. Okay.
You see what I'm saying? It's like we blew past this, and then we done went all the way up here, and we set this propulsion block. So now you expect that propulsion block to do its job, and then based off of, and if we come from the low, right there, right, that low, and we go all the way up to the highest high, right, to the highest high that in before we started coming back down. See, we came down to. Let me move all this other stuff. Let me see.
All right.
All right, so no, I want to. There you go. If you look there, you see we came back down to a discount of that range. And where did we consolidate? At the 50%, at the 50%, at the 50%. See, it price tend to consolidate at equilibrium. Every time we was consolidating, it was right around equilibrium of this dealing range right here, right? Because this was, you see what I'm
Look,
saying?
man.
This was the out. See,
I
listen,
see it.
listen to me. This was the hourly dealing range right there, right?
Yeah.
We was waiting for price to come back down. We set a new dealing range on the 15-minute, and we never came back to the discount of the hourly, and we went up. So now we just extend this hourly because we never came back to the discount. Now that we extended the hourly time frame, right? We just deal it. Now we finally drop back down to the discount of our dealing range. And now we don't want to see this low be taken out because that's our order block, our proportion block that we don't want to see price slide back below. We come back to the propulsion block, respect it, right? Smart money reversal, and then low risk buy, and then boom, we got displacement up, right? Once we get displacement up, right? Where's we consolidated there, and where's the fair value, right? At equilibrium, what do? We come back to fair value. See what I'm saying? And then we push up again. Now you follow what I'm saying?
Yeah. So now
Because
scoot over a little bit more.
that's the displacement. Which way?
Yeah, that was no back to the so you can see the whole thing. Nah, push your screen to the left side. I wanted to see the end, but okay.
Right here?
Yeah, I just wanted to see what was over there.
That's where we at now. That's current price. That's the day. That's the one when I was like, forget that low, because I was having issues over with my platform. If I turn my TDA back on, right there, I got to go down. No, did I? Oh, I deleted my line. I had a line over here. I deleted it. Why did I delete that line? Why did I delete my line? I deleted my line because it was down there by like 7. I was like, forget that 1755 something. It was like these lows over here. I was looking at these lows over here somewhere when I was trying to sell down to it. But yeah, man, this Lord, man, we've been talking for 54 minutes, man. 54 minutes. I ain't in my eight.
Let me get my screen right. Okay, now no. It went back down to it. It's going back to the same thing. So, well, the day ain't over with, is it?
We still got like 50 minutes.
So do it look like it's gonna come back down to the what it is, the green line right there? Yeah, to that green line where the other low at?
This here?
No, yeah, that line where that low at right
Oh,
there.
that's just something. That's just something I stuck on there when we was talking.
Oh, okay.
Eventually, it'll probably get down there. That's what I'm banking on because I got some puts that's at 139% right now. I'm banking on it going down though. Got some puts at 139% right now.
So you saying by the end of the day it should come close to that low that's in
I
the
can't
middle.
bring it over. I was trying to bring it over there, but it won't let me bring it over there to that screen. But I got some puts that's at 139%. I should go ahead and close it.
Oh, that means you up
Yeah,
139%.
yeah,
But
yeah.
look at this. Look. You see where your go back with your mouse? Yeah. That low right there in the middle of the screen. Put your mouse on that low. You saying to the left. Not to the left. On the other low. To the left. Right there, yeah. So you saying by the end of the day it's supposed to be coming down to that?
No, man.
Or
No,
another
no,
low?
not by the end of the day.
Oh.
Right. So I said eventually. Let's look at like these are daily candles right here, right? So coming past this, yeah, these daily candles right here, coming past this low right here, that probably gonna be a weekly break in market structure. Let's look at it.
Yes. I thought we were
Nah,
15
nah,
minutes.
not yet. This is your weekly break. Okay, so your weekly break in market structure is way down here, right? That's your weekly break in market structure right there. All right, and then you go to the daily. All right, so for the daily, that's a daily break in market structure right here, right? So a daily break below this right here, that right there, that's a bearish break in market structure on the daily, right? So if you get a bearish break in market structure on the daily, there yeah, if you get a bearish break in market structure on the daily right here, then this low would be in your targets, and then this low right here would be the main target. That low right there, that would be a short-term target, but this would be like the main target right there, right? But anytime you pass a low, it's always a chance of reversing. Okay, so now on the 4 hour, if we look at the 4 hour time frame, right? We already got a break in market structure to the downside on the 4 hour. See what I'm saying? So the 4 hour and below already got a bearish break in market structure. We was talking about that yesterday. We weren't expecting the price to go back up, and as you see, it's still dropping, right? And then these were the lows right here. Let me see. I had it at. I put it in the Discord. I said, "Oh, what's up? What's up, y'all? When y'all pulled up in here, Avery, Rhonda, what's going on?" I said, so frustrated. Oh, where is it? Right there. Oh, forget that low at 17.5, 54.25. Okay. So 17.5, 54.25. Let's do it like this right here. What's that? 54.25. Yes. Okay. So yeah, that low right there. That's the low I was targeting right there for today. You see what I'm saying? That's the low I was targeting for today when I went short. And I was like, I'm frustrated, forget that low. That's the low I was targeting for today. Now, this low down here, this low right there, that would be like a longer term low, like something like on a weekly level. You know what I'm saying? That would be this would be like a daily goal. This would be like a weekly goal.
Right now, you're on 1 day candles right now.
These 4 hour candles.
4 hours. Okay.
Yeah, this would be like a daily goal, and this would be like a weekly goal. You see what I'm saying? Cause and the reason why I'm saying that is because it's this entire range right here, right? From this is the entire range right there, and we've come back down right here. Now we've come back down to a discount of this range, so it wouldn't be unrealistic. Let's see some type of bounce, even if you did get a bounce just to come back down. So today is Monday, Tuesday, and then it wouldn't be unrealistic to get some type of some type of bounce. You see what I'm saying?
It bounced when you saying going back up.
Yeah, it went because we came into the discount, right? This is see right there where price consolidating at. Remember I told you about price consolidates at equilibrium from the low to the high. Price right there, we at equilibrium and price still pushing, right? So it's like showing it's like really, really bearish right now, right? So this right here would be like a weekly type goal for me. It wouldn't be unrealistic now that we're in a discount to see some type of bounce back up. And then you just look and say, hey, what can we go back up to? Right? We do have an imbalance right there. You know what I'm saying? On
So let me ask you
on
this
4 hour.
right quick. You saw like on the other one when you it said it went low and gave London a chance to buy, then it went low and gave New York a chance to buy.
Yes.
Okay, you see about your nighttime right now. This is live time, you said, right?
Yeah, over here to the right. Yeah.
Okay, yeah. See how it's going down right there? So now that should be low in the morning, right? To, like you say, to give London a chance to buy. It's going to stay low and then go back up once. Like
Well, it just
what
depends.
time
You
you
just
see it
you just,
before?
you look at what price doing. I'm saying that you you look at price during those time frames to figure out what is price doing. Like what is what I'm saying. You look for your clues during those windows. So when London, like you look at okay, what did Asia do? Okay, Asian did this. Now we're going to London. What London doing? What clues and price can I look for to see what is London going to do? That's all you do. Every time you get in front of the chart, you just look back and be like, okay, what did the last session do? When I be like,
Yeah.
look at the last session high and low, right? Wait till one of them get engaged. Wait till one engage, and once it engage, look for the clues of if you're gonna go long or short. If you bullish, you know what I'm saying. Look for if you bullish and a take out sell side, look for your reason to, you know what I'm saying, buy something long. Look for your confirmation. If you bullish and it take out buy side first, it can be a continuation. But I just like the bigger moves are gonna be off of, what I'm saying, attacking the opposite liquidity. That's when you're gonna get the bigger moves. Right? And I can explain that right here. Right? So looking at this area of price, just looking at this area right here, looking at this right here. Right. Matter of fact, let's go to this spot right here. And it don't matter what time frame I'm on, it's the same thing. Right?
All right.
So looking at this area right here, we bearish. Right? We bearish looking at this area. Cause I was like, what I'm saying? Matter of fact, I bought puts when we were up here. Right? So right here, we attacked opposing liquidity, right? And then we came down, right? And inside there is some kind of confirmation on the lower time frame. Right here is some kind of short. So if you shorten after attacking opposing liquidity just inside this box, right, you're in better shape than if when we attack the sell side and then retrace back in right there. You see what I'm saying? We attack the sell side and then we pull back into the range and drop. But look at the difference in the move when you attack the opposite liquidity and get short up here and come down. Whereas you attack the liquidity going the way you want to go and then push back up and come down. You see what I'm saying? That was the bigger moves come when you attack the opposing liquidity first because you're going away from where you want it to go and it's giving you opportunity to get a bigger move.
Okay. I got you.
Look, man, I'm hungry, man. It's almost time to go get the boys. I supposed to be working in the bathroom. I supposed to eat lunch and then, what I'm saying, work in the bathroom. But I'm gonna put this on.
I need to eat too, though. I ain't eating.
I'm gonna put this on on an unlisted video, and then I'll send you the link. So if you want to go back and look at it later. I know you probably ain't gonna look at it though.
Sure, I go back and look at send me some more. What you said? Call them KPS notes.
Copious.
Copious notes.
Let me stop this.